March 2025. Trump slams his fist on the podium and tells Congress, "We will take Greenland, one way or another." But what he didn't know? Greenland had already signed a $3 billion mining deal with Canada. While Trump threatened annexation, Toronto investors, Danish ministers, and German gas buyers carved out the Arctic. And the kicker? U.S. defense firms are now scrambling to buy metals from the very projects Trump tried to control. This isn't just about Greenland, it's a geopolitical backfire. This is the moment America lost the board and never realized the game had changed. And what happens next could fracture NATO itself. On March 4th, 2025, President Donald Trump declared before Congress, "We will annex Greenland one way or another," a statement that reignited global alarm over Arctic sovereignty. This wasn't symbolic posturing. Declassified documents revealed the Pentagon had reactivated the Eisenhower-era Arctic Gap Protocol and the Reagan-era Thule Radar Extension Draft. According to Bloomberg, Trump's advisors pushed annexation not for immediate military bases, but for control over an estimated $1.7 trillion in untapped mineral and energy reserves. The U.S. Geological Survey notes that Greenland holds 38 billion metric tons of rare earth elements and 17 billion barrels of oil, including strategic molybdenum deposits, critical for defense-grade steel. But while Trump pressed for control, Greenland was signing deals with Canada and Europe behind his back. And when the ink dried, it wasn't an American flag on Arctic ground. It was Canadian equity backed by European financing. By March 2025, Greenland Resources Incorporated, a mid-tier Toronto mining firm previously delisted from Canadian growth indexes, secured a 30-year mining license from Greenland's parliament for the Malmbjerg project. According to Reuters, this site alone could fulfill over 80% of the European Union's molybdenum demand for defense and green tech sectors through 2040. Meanwhile, Amaroq Minerals, another Canadian firm, raised £45 million, about $61 million in a cross-listed financing round with 73% of funds sourced from British and Nordic pension institutions, according to the Financial Times. Greenland's Minister for Business, Naja Nathanielsen, confirmed the projects align with the country's economic self-sufficiency roadmap and will require 70% local labor participation. Ottawa never made a public announcement, but it didn't need to. While Trump's team prepped military contingency plans, Canada was already in the boardroom. A Bloomberg investigation revealed that over 20% of Amaroq's fundraising came from U.S.-based equity firms, including a stake from a fund previously linked to Lockheed's defense-linked pension portfolio. Simultaneously, Greenland Resources signed a forward supply contract with a Rotterdam-based steel firm partly owned by American institutional investors. Wall Street Journal data shows U.S. equity accounts now hold a cumulative 12.4% passive exposure to Greenland-bound Canadian mining ventures. Ironically, while the White House publicly floated military control over the island, Wall Street was funneling capital into the very companies advancing Europe's raw material independence. And this wasn't unnoticed. European Union Internal Market Commissioner Thierry Breton praised Canada's role in securing EU mineral autonomy by 2027, with Greenland labeled strategically aligned in the EU's latest Critical Raw Materials Act compliance report. Well, after the U.S. State Department proposed a development agreement that was tied to the Thule base expansion and exclusive satellite uplink rights, Copenhagen just flat out rejected the deal in 24 hours, saying it conflicted with the NATO charter. Then, Greenland's local parliament, which is mostly run by the Inuit Ataqatigiit party, passed a new law, Infrastructure Phallic, that actually bans any military-linked investment unless 80% of the equity is publicly disclosed and locally accountable. According to the Danish Broadcasting Corporation, Greenland's rejection came right after internal polling showed that 69% of citizens were opposed to any U.S. military footprint expansion. Meanwhile, Canadian companies agreed to mandatory indigenous labor minimums and profit sharing into Nuuk's Sovereign Future Fund, which is modeled after New Zealand's Maori asset model. U.S. firms, including 2 Department of Energy-backed contractors, just declined similar terms, calling them, quote, commercially infeasible. And as Washington threatened to escalate things via NATO, France responded by deploying the nuclear submarine Suffren to Baffin Bay on a so-called monitoring mission. Trump's play was supposed to be simple: offer wealth, project strength, claim leverage. Instead, the Arctic map is being redrawn, and the US is just, well, absent from the legend. Lockheed Martin just told shareholders that hypersonic weapons testing between 2026 and 2030 might face critical alloy shortages if Greenland exports remain out of reach. Raytheon, in its first quarter 2025 investor briefing, announced plans to substitute Chilean-sourced molybdenum, which is going to drive production costs up by 12%. Meanwhile, Germany, which used to rely on US LNG, is now in talks with Cedar Energy to co-finance Arctic floating LNG units off Disco Bay. Every single day the US pushes harder, the Greenland-Canada-Europe nexus just pulls tighter. The Pentagon may still talk in war games, but honestly, the boardroom is already closing the doors. The question now isn't whether the US will act. It's whether it still has a seat at the table. In May 2025, Canada, the EU, and Norway quietly launched the $3.1 billion Arctic Green Transition Fund, designed to finance Greenland's infrastructure without a single dollar from Washington. According to the European Investment Bank, this fund is set to underwrite 14 clean energy and mineral projects by 2027, most of which have already been awarded to Canadian and Scandinavian firms. What really makes this fund structurally bulletproof is its governance. All decisions are made by trilateral boards, and there's absolutely no US veto power. Bloomberg confirmed that IFO, Denmark's export credit agency, has already committed $700 million to these Arctic ventures. And Sweden's pension consortium is allocating 1.2 billion euros to long-term Arctic metals portfolios. The exclusion here wasn't subtle. It was totally deliberate. And while Trump threatened NATO repercussions, Greenland, by embedding itself in EU-aligned sustainability frameworks, has basically made itself sanction-proof. Well, Greenland's parliament actually passed the Infrastructure Phallag Act back in July 2025, which mandates a 70% local labor requirement and a 10% profit tax on all extractive projects. And get this, the revenue is being funneled straight into Nuuk's newly established Future Fund. According to the Financial Times, that fund has already raked in 610 million Danish kroner, so about 88 million US dollars, in just its first 2 quarters, which is, wow, 42% higher than anyone projected. The fund itself is modeled after Norway's Sovereign Wealth Fund and New Zealand's Maori Trust structure, aiming to anchor economic autonomy while also incentivizing foreign companies to play by Greenland's rules. Canadian and EU partners signed on without any conditions, but US firms flat out refused. In a statement to Reuters, Greenland's Prime Minister Jens Frederik Nielsen said, "This is not an island for sale. It's a nation being built on terms we decide." Unlike back in 2019 when Trump floated the idea of just buying Greenland, the island now holds leverage not with defense, but with dividends. As US LNG permit delays stretched out to an average of 137 days under Trump's 2025 export restructuring order, Germany went ahead and finalized a 25-year LNG offtake agreement with Cedar Energy for Arctic gas coming out of Disco Bay, completely bypassing American terminals. Handelsblatt reported that Berlin expects this move to fill about 14% of its post-Russian gas shortfall by 2028. And they've already started trials for floating regasification in Bremerhaven. At the same time, the European Bank for Reconstruction and Development earmarked 480 million euros for Arctic LNG logistics, while France's Engie started negotiating co-ownership in a liquefaction facility anchored off Greenland's southwest coast. The US, which made up 47% of Europe's LNG imports in early 2024, has now dropped below 34% as of the second quarter of 2025. According to Eurostat. So, Trump's hardline Arctic strategy, which was supposed to guarantee dominance, has actually sped up Europe's diversification, away from US influence. NATO's unity took a real hit in June 2025 when France and Norway refused to sign Washington's proposed Arctic Defense Integration Addendum, citing concerns over US unilateralism. Meanwhile, Canada quietly updated its Northern Security Doctrine, swapping out references to Joint US-Canada Continental Control for Autonomous Circumpolar Alignment. And according to a leak published by Politico, Poland's Foreign Affairs Committee was uneasy about being forced to pick sides in what one diplomat called an economic annexation campaign disguised as strategic necessity. Inside the U.S., Senator Lisa Murkowski introduced a bipartisan bill to restrict military appropriation for Arctic action unless there's congressional authorization, something that's never happened before. And yet Greenland never left NATO. It didn't have to. By rooting itself in multilateral economic pacts and legal safeguards, Greenland basically made any strong-arming by a member state a direct threat to the alliance's stability. So Trump didn't just fail to acquire Greenland, he may have shaken the very structure that once gave him leverage. So, what happens when the ice breaks for good? Greenland isn't just some blank spot on the map anymore, it's a fully armed economic firewall. What started as Trump's attempt to plant a flag has flipped the script. Now you've got American defense firms scrambling for supply, European investors locking down assets, and Canada playing middle power diplomacy like a pro. And while Washington is still eyeing the island as a strategic prize, every new Arctic rail, refinery, and resource clause is a sign that the game has totally changed. So here's something to think about. If the Arctic is melting even faster than we expected, and Greenland is already woven into Europe's future, is the US still trying to buy an island? Or are they chasing a strategy that just doesn't exist anymore? Drop your take in the comments. We're glad you're enjoying this video. Please like and subscribe. Check out another video that is now on your screen.